Manappuram Finance came out with its fourth quarter earnings. Its net profit jumped by about 43%. However, there was a small bit of a downtick as far as its margins are concerned. The main point that stood out in the earnings was the muted growth in the gold loan AUMs. The management is here with us to talk to us more about their Q4 earnings. Mr. VK Nandakumar, MD and CEO of the company. Sir, hi, a very warm welcome to the show. Could you talk to us about the factors that went behind this 43% profit growth?
One reason the yields are maintained, even though there was some pressure at the borrowing costs. So we could pass on this to the borrowers so that our yields are protected. The NIM is protected. The yields also have slightly improved. So the other thing is our subsidiaries started performing well. For microfinance, they have performed very well. During the year, they have reported a profit of around 132 crores. Last quarter also was good. The other businesses like vehicle finance, home finance, insurance broking, etc., all have turned around and started reporting profits. So overall, the growth was good. So that led, and also the NPL level was very low. It was maintained very low at 0.5%, with a net NPA 0.3%. These are the reasons for a better performance during the last quarter as well as during the last year as a whole.
Sir, the softness in your gold loan business continues with just about 10% AUM growth. Give us an outlook here. What are your plans to strengthen this one and targets for FY20?
See, we are growing at a rate at which the NBFC sector is growing. Even I think on an average, we are doing better. Our AUM growth was 10.5%. At the same time, our asset quality is maintained. So the NPL level compare others in the sector, ours is the lowest. So and through the second quarter, there was some degrowth. Some slower growth was there in the second quarter. In other quarters, we have improved that. We hope that this year, we'll be able to maintain a tonnage growth of around 10%. That's what is our expectation. The reason for that is, even though our level playing field is lost with the unorganized sector, where there is no LTV. But with the technology, with the online gold loan, which is a digital application, the customers can operate their loans from anywhere. Along with that, we are offering the customers a free safe custody facility. So we don't charge anything for the safe custody. Up to 75% of the value of their ornaments is offered as a towing power, which they can use from anywhere. So there are no charges for the transactions. So the cost of coming to the branch for servicing the loan is eliminated through this digitalization. With this, we expect that we will be able to migrate to the next level as far as the customer profile is concerned. So we hope that with the digitalization, with the facilities offered to the ultimate consumers, our growth expectation of 10% growth in the collateral could be achieved during the current year.
So one clarification
volume growth depends on the price also.
So one clarification for my understanding, when you say tonnage growth, is that the same as AUM growth and 10% is the growth that you're targeting?
So the AUM growth is dependent on the market value of the gold, which we cannot predict. I hope the market value will remain more or less at the same level. So 10% tonnage growth means 10% growth in the volume also is will happen. So that's our expectation. If the price has gone up by a certain percent, a similar growth will be there, a higher growth will be there compared to the tonnage.
Sir, I want to talk about your MFI business. You've seen a really strong growth there with about 58% AUM growth, about 150% profit growth. Isn't it a very aggressive growth rate? And because the sector can be vulnerable to macro headwinds, and we're seeing a consumption slowdown, some signs of slowdown in the economy as well. And these are the weaker sections of society that you cater to, which may be even more vulnerable. Your thoughts, sir?
See, last year, as you mentioned, the profitability growth was over 150%. The reason is during the previous year, the impact of the demon, there were write-offs. So towards the last quarter of last year only, we could come back to profitability. This year, whole of the year was good. Because of that, we could achieve an ROA of around 4% from that business, which is possible. So regarding volume growth, we have grown by around 60%. It was possible because there was a vacuum which was created by those MFIs which have become banks. By becoming banks, their obligation to broad-base their asset classes. Because of that, their focus on MFI business has come down. So this is a good opportunity for us, and we have de-risked our business also to a great extent by expanding our operations across the country. Now, in no state, our portfolio is over 10%, other than in Tamil Nadu, where it is around 25%. This is because of the legacy where the company was started and operated over the years. It's only because of that reason. There also we are consistently bringing down the exposure. One challenge in the MFI is the regional situation. Like in Andhra situation, etc., etc. So that's the major reason why we thought even at a higher OPEX, we should expand our business across the country. We have our own risk mitigation, like capping our exposure to a single individual to around 75,000 rupees, which is much lower than the regulatory cap or the self-regulatory cap. So, and also we are more conservative to ensure that the leverage of borrowers are kept at an optimal level. So we don't lend where the borrower has borrowed from more than one institution. And many similar risk management measures are introduced to the system. And also the technology. We disperse directly to the bank accounts now, not in cash. So whichever possible, understanding the risks in the industry as a whole, and also the company-specific issues, addressing these issues, we plan to expand the business at the same speed in the coming years also.
Sir, I want to talk to you about the home finance businesses. That has been the one which has been in focus. Again, you had a very strong loan growth of about 38% here as well. And I was talking to Muthoot the other day, and they said that they are planning to go slow in this segment. So, would you as well be? Are you also planning to go cautious in this segment?
We are cautious. So we are in the affordable housing. Our average ticket size is around 10 lakhs now. Most of them are self-constructed properties where land is also available. In this segment, we have found the risk to be relatively lower. And also, if we have taken over these assets, disposals become easier. The actual LTV will remain around 50-60% only, even if we lend up to 90% for the construction of the house. So this is the advantage. Our risk mitigation primarily stems from the very fact that the ticket size is smaller, and we lend to those customers where we know their profile better.
So one last question, you notified the exchanges that you're planning to get into micro insurance. What is the business potential that you see here?
This is for captive insurance, mostly from microfinance customers and also from gold loan customers. Currently, our mobilization of premium is around 200 crores this year. That is the run rate we have, monthly run rate, so that we can have a 200 crores premium collection during the whole of the year. So this is growing at a pace of around 30-40% with the growth of the microfinance business and other businesses. So we feel like for running a company without a cash burn, with a focus on captive business, our OPEX will be very low. Our other costs will be very, very low. With that, we hope that we can run the business without any cash burn.
All right,
This will be focused on micro insurance to the extent of 90%. This is credit life insurance of 18 months.
All right, Mr. Nandakumar, thank you so much for speaking with us and helping us understand your Q4 earnings and plans ahead.